If you're working with clients that are real estate investors, they're definitely gonna ask you what the cap rate of a property is once you're doing a showing on them. Hey, I'm Julian Chavez, I'm 23 years old. I own a real estate brokerage in Miami, Florida, I buy SFL, and I also am a real estate investor with currently 18 properties. And I'm gonna teach you how to calculate a cap rate. A cap rate is a really popular and important measure to determine whether or not you or your client should buy that income producing property. This could be for commercial or residential.
Why are cap rates important?
Cap rates are important because that's one of the good measures that you could use to calculate the return on investment on a property and decide whether or not you're gonna buy that property. Cap rate is calculated as net income divided by the purchase price. So how do you calculate net income? You calculate net income by getting the gross rent. So the property rents for $1,000 a month. The gross rent is $12,000, and then subtracting all the expenses on the property. So that could be maintenance, management, if you cut the lawn, if you pay for the water, and all other expenses associated with the property. I suggest that you over account for them, that way your calculations don't fall short. So now I'm gonna give an example of a property that the iBuy fund bought and calculating the cap rate for that property. This property is a triplex. One unit is rented for $650 a month, the other unit's rented for $650 a month, and the third unit is rented for $850. So the property rents out for in total $2,150 per month. So the gross rent for the year is $25,800. For this property, we pay for insurance, taxes, we get the lawn mowed, and we pay for water for one of the units. The insurance cost is $948 per year, the taxes are $1,590 per year, the lawn is $780 per year, and the water is approximately $960 per year. So then you get the yearly rent of $25,800 and subtract all the expenses from it, which equals about $21,500. That is your net income. You get the net income and you divide it by the purchase price. The purchase price is $145,000. Once you divide those two numbers, it gives you about a 14.84% cap rate. This is an excellent return, but it's not the only measure that we use to decide whether or not to buy a deal. Another great measure is a cash on cash return, and I'll explain that in another video. Another tip when calculating your cap rate is just to know that these numbers and all these return on investment models, they're never perfect. Maintenance and unexpected repairs are always a variable. So that's how you calculate a cap rate. Please keep this calculation in mind for trying to get deals done and getting yourself investment properties. If you have any questions on it, please DM me on Instagram, JulianChavez_RE, or comment below on the YouTube section. If you found this video helpful, please subscribe to the channel.